From Argus Media, this is Fuels Focus, a recap of stories within the U.S. refined products marketplace in the week that was June 23rd through the 27th, 2025. Investment firm Black Lion Capital Advisors has submitted an $8 billion cash bid in the auction to buy U.S. refiner Citgo. Black Lion submitted the bid on behalf of a group of partners. The investors are offering a base price of $8 billion plus additional amounts for court and government fees and insulation funds up to $3 billion. U.S. federal judge in April approved Contrarian Capital Management's proposal of roughly $4 billion as the stalking horse bid in the auction, setting a floor for other proposals. Other bidders in the auction include Gold Reserve, which protested the choice of the Contrarian bid after its own nearly $7.1 billion bid was not recommended. Other creditors raised objections to the choice of Contrarian's bid, as did lawyers representing Venezuela. Trading firm Vitol is also a bidder in the auction, but it's unclear whether they revised their bid ahead of the June 18th deadline for proposals. In other news, U.S. crude refinery capacity ticked down by about 0.2% last year, a trend that's poised to accelerate through next year on planned closures of major refineries. U.S. refining capacity as of the first of the year fell to 18.3 million barrels a day. That's down by 43,000 barrels from a year earlier. Capacity declines in California, Oklahoma, and New Jersey outpaced gains that were mostly in Texas and Louisiana. Total U.S. capacity should drop again this year. LyondellBasell's Houston refinery was closed back in February, and Phillips 66 plans to shut its Los Angeles refinery in the fourth quarter of this year. By April next year, Valero plans to shut or repurpose its Benicia, California refinery, and it's also evaluating strategic alternatives for its Wilmington, California facility. And Phillips 66 is planning to produce CARB gasoline at its Ferndale, Washington refinery to help supply the California market. CARB gasoline is a special fuel blend mandated by California that aims to reduce pollution and improve air quality. It burns cleaner, but it's more expensive to produce because it requires more processing steps and costly blending components. And that's all for this edition of Fuels Focus, a production of Argus Media, a leading independent provider of commodity pricing and market information. For more on these stories and others, along with the latest pricing in the marketplace, make sure to subscribe to the daily Argus Media U.S. Products Report.